I'm Yahoo Finance Executive Editor Brian Sozzi, and you're taking a look at a live shot of the opening bells on Wall Street on this Wednesday morning. Consumer insights company NIQ Global ringing the bell at the NYSE, and Carlsmed getting big popping over at the NASDAQ, I believe, on its IPO day. Now, investors have a lot of different threads to pull on today, some bearish and some bullish. 'Tis often the case in investing, folks. Let's start with the bullish. President Trump says he has inked a trade deal with Japan. The news is providing confidence that bigger deals with the EU and China could get done soon. Also bullish is AT&T saying on its earnings release it stands to save up to $8 billion from this year to 2027 as a result of the newly signed One Big Beautiful Bill. And on the bearish side of things, Hilton issued below consensus guidance in part because of reduced inbound tourism, and Hasbro says it was forced to take a $1 billion impairment charge in the second quarter in its toy business because of tariffs, mostly on China. Now, Opening Bid is all about serving up investing analysis you need to know to unleash the power of your portfolio. We're digging into what's really moving stocks, giving you the unbeatable context to make decisions with all that money I know you have in your portfolio. Let's get over to the NASDAQ, where we find Ali Canal on this big earnings morning. Also a big earnings evening, Ali. All eyes on Tesla, but clearly there's a lot of other things going on besides that Tesla earnings report.
Right, the positive trade news with Japan sending stocks higher today at the opening bell. We're seeing gains across the board here, and this comes after the NASDAQ was teetering on the edge there in pre-market trading, but we are seeing the NASDAQ up around 0.2%. The Dow adding roughly 230 points, and the S&P 500 up around 0.3%. And I also have my eye on some individual movers here, Brian. Texas Instruments, they are seeing losses this morning after a beat in Q2, but its Q3 outlook coming in below analyst expectations. The company projecting 11% sales growth this quarter, but that does mark a slowdown from last quarter. Shares also accelerated losses after analysts questioned executives about signs of weakening demand there. And this company, it's a major chip supplier for automakers and industrials, and it had previously ridden that broader chip rally that we've seen throughout the course of this year, but you are seeing shares down about 11% today. And then similarly, we are also seeing declines in NXP Semiconductors after it also issued a Q3 guidance that failed to impress investors. Analysts saying that the outlook didn't excite traders. There were some concerns about what drove growth in the quarter as well. For example, instead of car-related sales, most of the gains came from industrials tech, which wasn't really what Wall Street was hoping for. And then we also saw profit margins a little lower than expected, which added to that disappointment. You're seeing shares down about 3% here. And you just mentioned on the tech front how we'll be seeing results from Alphabet and Tesla after the bell today. This is the start of those Mag 7 reported earnings. So all eyes are going to be on that close here, Brian.
Yeah, Texas Instruments calling out some weakness in autos, GM, weak second half outlook, just connecting some dots in real time. Ali, talk to you in a minute. All right, we're kicking things off with your daily guide to the biggest market drivers of the trading day. Here's what I'm watching. Number one, the trade deal counter is beginning to add some key names. While markets await bigger trade deals with China and the European Union, President Trump is giving the bulls their pound of flesh. Trump says a trade deal with Japan has been reached where the country will get stamped with a 15% tariff rate on imports to the U.S. Shares of automakers such as Toyota have soared in response. This on the heels of a trade agreement with the Philippines and terms with Indonesia being reached. Number two, meme mania rolls right along. We are seeing a little evolution of the renewed meme stock trade today. Tuesday's hot mover in struggling and bumbling department store Kohl's has been replaced by big moves in Krispy Kreme and GoPro. Remember GoPro? Two struggling brands in their own right. The latest activity in memes comes as retail investors look to capitalize on the bullish vibes that have sent higher quality stocks to record highs this year. Number three, earnings season is in full swing. So much focus on Tesla earnings out after the close. I think people are forgetting other big names out this morning. I'm locked in on AT&T as they call out a huge new profit tailwind from the One Big Beautiful Bill. I just got off the phone with the company's CFO on this one, and we'll have the details shortly. That's what we call a deep tease. Meanwhile, Hilton issued full-year guidance below consensus as trade uncertainty weighs on international tourism. So lots going on here. Big earnings day. Our roundtable for today to cover all this stuff. Lizanne Saunders, Charles Schwab, Chief Investment Strategist, and Yahoo Finance Senior Reporters Ali Canal and Inez Ferre. Lizanne, good to see you here. I really enjoyed your conversation with Julie Hyman this morning, talking about the wall of worry. Let me, as they would say, double click on that one, because we're getting this new trade deal with Japan. Are we now in a position that as we get more deals, this market is likely to respond higher to them? Or do you think we're reaching that point where these deals are priced in?
It's a great open question. And another aspect to the wall of worry is that it sets the psychological bar fairly low. And markets tend to move at the margin. And I'm fond of saying, and have for my 40 years in this business, that better or worse often matters more than good or bad. So when you have the psychological bar that's gotten set low, as was certainly the case in the early part of April, it is easier for the actual data to hurdle that bar. Now, I think we are closer to something resembling complacency, not to mention valuation that have expanded without the benefit of forward earnings having expanded. So I do think there may be more pullback possibility, to your point, simply because a lot of the good news that we're starting to get, at least in relative terms, has gotten priced in.
Inez, what's on your radar on this trade deal Wednesday morning?
Well, just the fact that you see a company like Toyota going up so much. Also, you see the German automakers higher as well. And this is just because of optimism that, look, the U.S. can get a trade deal done with its biggest ally in Asia, also a big buyer of U.S. treasuries. And so this is very bullish for on the trade front overall, that if it can get a deal done with Japan, it'll be able to get a deal done with the EU. The German automakers are up on this. So this is overall, as far as the trade front's concerned, bullish. Also, part of the deal of this investment of $550 million going into semiconductors, infrastructure, going into energy infrastructure, pipeline infrastructure, also aerospace and defense. This also is bullish for those parts of the market that have also been doing very well, particularly the industrial sector.
Ali, I know you're an avid consumer of macroeconomic data. You often report all this stuff on our live blogs, which I really enjoy reading. I'm very curious on how the macro data will come in over the next 6 months. You know, lost a little bit in this Japanese trade deal is that tariffs are still in place. Even the same deal with Philippines, and I think even within the terms of Indonesia. I mean, these are tariffs that weren't in place before this administration in many respects.
Right, and to that point, Brian, Goldman Sachs economists are now estimating that the U.S. effective tariff rate is going to be at around 15%. This is significantly higher than what we saw at the start of the year. So far, we have seen companies absorb a lot of these tariff costs, and we haven't seen a significant trickle through into the consumer. But even if you look under the hood of the Consumer Price Index, we have seen certain products see higher prices, like apparel, footwear, furniture. But now that we have these firmer trade deals starting to come into play, we're going to have a higher effective tariff rate. And on top of that, we have a weakening dollar. That's going to make the tariff burden harder for companies. There is going to be a point where the rubber meets the road here, and that consumers are going to have to pay those higher prices. So at what point will we be in that cycle? That is the big question. And we have heard from economists that it's going to take a bit of time for tariffs to fully show up in a lot of these different various pricing categories. So that's one thing I have my eye on. And of course, that has trickle-through effects into the Fed as well, and what they will ultimately be doing with interest rates down the line.
Lizanne, how crazy am I? And you can tell me, it's fine, it's all good. Now, as we've seen this trade uncertainty, we've seen Mag 7. I mean, these have been some of the hottest names. Big cap tech has been bowled up. But now that we have some form of initial certainty on what a deal with Japan might look like, Philippines, maybe even, I would say, the European Union, do you rotate more into value? Do you start kicking the tires on some of these industrial names that were doing decent amidst the trade war, but might do a little bit better than expected over the next 6 to 12 months?
Well, industrials is the best performing sector year to date. And within the Magnificent Seven, we still think of the moniker as representing leadership from a performance perspective, when the reality is that they represent leadership from a contribution perspective, not fully from a performance perspective. Of the 7 stocks, only 3 are outperforming the S&P on a year-to-date basis. The other 4 are underperforming. And in fact, if you look at the top 10 best performing stocks in the S&P this year, not a single one is in the Magnificent Seven. So I think sometimes we get stuck in these narratives and make assumptions about where the leadership resides, when in fact there have been other areas that almost in a stealthy way have displayed much stronger performance. In addition to tech and comm services, which at the sector level have done well, you've got utilities as kind of tracking there. And that's, I think, an example of maybe the broader way to focus on AI with the build out of data centers and the energy needs. So I do think, as I discussed with Julie earlier, I do think that there's a lot of a mindset within the market to look for opportunities outside those narrative-driven mega cap names. And I think that, at least in fits and starts, is probably going to continue.
Let's keep this convo going. Lizzie, I'm going to stay with you here on these meme stocks. Today we're seeing a lot of action in GoPro, Krispy Kreme. I would argue fundamentally weak companies. Help us understand exactly what are we seeing? Is it just that, the retail investor, let's say you have couple $1,000s in the market, you're a new investor, and you just want to chase this momentum. You know what a GoPro does, you know what a Krispy Kreme does, and you're going out and buying some of their stocks and don't even know where to find the financial statements? I mean, is that what we're back to again?
Well, that's certainly what we saw back in the 2020-2021 period. There may be a modicum of additional sophistication that has been brought into the mix in terms of the rationale behind what retail traders do. And given that, if you look at various baskets of outperformance this year, particularly since the April 8th closing low, a lot of what has outperformed significantly, obviously the memes, but the heavily shorted stocks of every variety. So I think there may be that also added attempt on the part of the retail trader to press those shorts and force a repositioning on the part of speculators and institutions.
And as you remember GoPro? It's having a moment again, except it's unclear to me if anybody's actually going out and buying GoPros, because you have this thing, I don't know, it's called an iPhone.
Yeah, GoPro, I remember in like 2020, 2021. Look, but it's not just the meme stocks. You're also taking a look at some of the tokens, the meme tokens, Saz. I mean, look at Shiba Inu, look at Doge. Over the last month, Doge is up more than 50%. Shiba Inu's up more than 20%. Now, year to date, you're still seeing those meme tokens that are negative for the year. But nevertheless, we have seen over the last month sort of frothiness in the market, so to speak, because you are seeing retail investors that are going into these riskier assets. Now, as far as going forward, we know that in August, things like Bitcoin, for example, are seasonally weaker, but we are seeing a rotation into altcoins that also is indicative of this sort of meme frenzy that we're seeing right now.
I will not let you, Inez, rope me into a conversation here today on Shiba Inu. Or I don't even know if I said it right. You will not do it. Lizanne, last word to you here. I was talking to AT&T CFO this morning about their call out on all the tax savings from the one big beautiful bill. Is that an underappreciated upside for corporate America? I didn't expect AT&T to come out on the first page of its earnings release and say they're going to save $8 billion over 3 years because of this plan.
Well, I think it has to do with what would have happened had the bill not passed, at least as it relates to the tax piece and the extension of the 2017 tax cuts. So whether it was companies building in a potential expiration of that, which is what would have happened if the bill had not passed, and then having that better relative benefit that accrued from the bill having passed. But the reality is most of what's happening in the tax front in that bill is an extension of the 2017 tax cuts. Not passing it would have been a big economic hit. I'm not sure that we can consider it a brand new stimulus for the economy, like was the case in 2017 when those tax cuts were indeed new.
Yeah, it's a good point. This company's CFO telling me, well, basically it's a lot of accounting. They'll be able to amortize certain things, and it lowers their taxable income. Coming up, why one industrial giant is issuing an earnings warning, which is sending its stock down a lot this morning, and we'll have our stock of the day. No clues today. I will simply tell you, it's Tesla. Welcome back to Opening Bid. Going down a floor. That is what's happening to the stock price of elevator giant Otis. The company issuing soft full-year EPS guidance as it sees weak demand for new equipment out of China and the Americas. Otis CEO Judy Marks told me by phone today that, quote, new equipment is probably the place where we are finding the most challenges. She adds she is encouraged by the trade deals being reached by the Trump administration, giving a global company like Otis more predictability in managing its business. I imagine you will hear similar language from other industrial CEOs this earnings season. All right, let's fire up our stock of the day, and that is, of course, Tesla. Tesla earnings are out after the close, and CEO Elon Musk has a lot of work to do to get the stock working higher again. From sharing more specifics on robo-taxis to soothing concerns on his political ambitions, Musk has to nail the earnings call later. But ultimately, this one line from Goldman Sachs analyst Mark Delaney, I think, says it all on the street's views on Tesla into this report. Says Delaney, our EPS estimates for 2Q and this year for Tesla are below consensus. Jumping onto the Yahoo Finance platform, you can see concern on Tesla's bottom line. Earnings estimates have totally tanked with no bottom in sight. So it says a lot that Goldman is already below a lowered EPS consensus. Still with me is my roundtable, Liz Ann Saunders of Charles Schwab, and our very own Ali Canal and Inez Ferre. Inez, I want to go over to you on all things Tesla. This is a very key moment for Elon. I'm sure he understands the gravity of the situation, but really this is the first real quarter, I think, of him being on an earnings call where he's been more fully engaged with the Tesla story. That last earnings call, he still had 2 feet inside of, I guess, 1 foot inside the White House, 1 foot inside of SpaceX, and maybe a couple of hands in various other operations he does business on.
Yeah, and look, analysts and investors are going to be parsing out and paying close attention to what he says about anything that has to do, if he says anything about politics, about aspirations in politics at all, and of course, on the company's bottom line. Look, robo-taxi, affordable EVs, those are going to be the points that Wall Street will be looking at, and also the mega pack growth in these mega packs that they have for battery storage, the fastest growing segment of their business. So these are going to be the highlights that the street is going to be looking at. But make no mistake, I would not bet against Tesla right now, because I just took a look at the chart from June 5th. Remember when Elon Musk was tweeting about Trump in those tweets that he then deleted? From June 5th until now, you have seen the stock go up more than 15%. So yes, year to date, it's down. But anything can happen with this stock. This is a cult stock.
Inez, you're having quite the roundtable performance here today, calling out Shiba Inu. I mean, you're sounding bullish on Elon Musk. I mean, is there anything to what Inez is saying here, Ali? I mean, push back on her a little bit if you want.
Okay, well, I know the bread and butter of Tesla's business is their cars, right? And to that point, we have seen that struggle both in the US and abroad. So from that standpoint, we could potentially see another disappointment. Now, I think on the earnings call, Elon Musk is going to have to talk about the robo-taxi rollout, autonomous driving. But even on that front, too, there is more competition with Waymo, more competition from Uber. So what's the competitive advantage for Tesla? And if he doesn't come out swinging with some hotter takes, with some actual tangible evidence when it comes to the Tesla's plan here for the future and what their performance could mean, I think we could see a more intense stock reaction. So like Inez was saying, we've seen a lot of volatility in this name. Shares can go up a lot, but they can also go down a lot. And a lot of that hinges on the narrative and tone of Elon Musk, which you just never know, Brian, what you're going to get with him.
No, you never know. But even though Inez is sounding a little bullish on Elon. Liz Ann, last word to you on this one. GM yesterday calling out a weak second half demand outlook for its business. We know Tesla's auto business, weak sales in the second quarter, saw that through the deliveries numbers. Ali was talking at the top of the show, a weak outlook from Texas Instruments. Any concerns on your part about the economic outlook as we get deeper into the second half?
Yeah, I mean, I think it is still murky, maybe only slightly so because of some of the trade deals that are announced, but we're not in clear sailing mode here. And, you know, GM put actual numbers to the hit that they anticipate. You're seeing it in a lot of the travel related stocks too, with concerns particularly about lower end income consumers. I still think that we have a bit of a K-shaped economy. Maybe that's another similarity, like the meme stocks being all the rage again, to what was happening in 2020, 2021, where you had this bifurcation. I think that we have a bifurcated economy right now, haves and have-nots, both at the consumer level and at the stock level. Almost AI or non-AI would maybe a way to make that differentiation.
Yeah, I'm glad you mentioned the travel stocks. I encourage everyone to check out that Hilton earnings release. Some concern in there regarding inbound travel. All right, it's time now for our question of the day. Have bond yields quieted down too much given the country's ballooning debt and concerns around Federal Reserve independence? Ali, I want to go over to you because you have covered the bond market very closely for us here throughout the year. That rise in yields last fall and even in the first part of this year, things have really quieted down. My question is, could we see another spike in yields to that 5%? And by yields, I mean I look at through the prism of the 10-year.
Yeah, I think a few weeks ago, or maybe it was a couple weeks ago at this point, I don't know, Brian, the time flies
blur, Allie. It's all
in
blur.
this news cycle, but it's all a blur. But when President Trump was seriously considering firing Fed Chair Jerome Powell, when a lot of those reports started to percolate, you did see longer term yields like the 10-year and the 30-year rise pretty sharply. But then once he backed off of those threats, we saw things calm down. I am a little surprised that we have seen such a calm and level-headed bond market, considering the fiscal side of the equation, that tax bill that you were mentioning. This was a big concern earlier in the year, and that spurred a lot of the activity we were seeing in the bond market. But now that that bill has been signed, and I think we have a lot more clarity on that front, traders are a little bit more sanguine, it seems to be, within the bond market. But I think anything related to the Fed, that's where you're going to see this sharper reaction. And then, of course, as always, we have our eye on inflation. I don't think we're going to see that significant impact from tariffs this month, next month. Maybe it's going to take us into the fall, winter, possibly even 2026. But that's when you're going to start to see some of that trickle through into bonds. So I have my eye on the Fed for any big moves there. But for now, we seem to be at pretty solid levels.
Lizanne, what's the ideal, I guess, portfolio construction? As we still see stocks at record highs, like what component of your portfolio should be in bonds at this point?
Shame on anybody, Brian, that answers that question with percentages. At Schwab, we have $10.8 trillion of client assets. There is no one right asset allocation strategy or allocation to an asset class, and anyone that puts numbers forth is not taking into consideration
Amen,
the vast
Lizanne.
differences.
Love it.
I mean, so sorry, I'm not going to give you a precise answer. It's a function of your risk tolerance, your time horizon, your need for income, past experiences, diversification benefits. I mean, the list goes on, but kind of boring to talk about, but that's my answer, the non-answer.
And as last word too, do you see any flare-up happening? I know you cover commodities, you look through a lot of different areas, sectors of the economy. I mean, you think maybe this is the spike in yields, we're just not going to see it anymore for this year?
For this year, like Ali was saying, I mean, it's been relatively quiet recently. I think that if investors believe that the Fed is acquiescing to Trump, then maybe we could see a flare-up. If Powell were to leave, maybe we would definitely see a flare-up. But overall, if things continue the way they do, if we keep getting trade deals, if there's clarity on that front, then you could see a quiet bond market, so to speak, for a while. But really, it all depends on what happens with the Fed and if Trump continues to push on that end.
Big thank you to Lizanne Saunders, Inez Ferre, and Ali Cannell. Awesome roundtable. All right, the trading day is underway, and in financial markets, every second matters. What you do right now can determine your financial future. So here's my final thought as you enter battle today. If you can't explain what the meme stock company you are trading in and out of does to make money or lose a lot of it, it's time to look yourself in the mirror and question where you want to be wealth-wise 10 years from now. I'll leave it there. Coming up, Yahoo Finance's Market Catalyst. We're bringing you the news behind the market moves for the trading day. Do stick around.